I wish that I'd been taught when I was at school. I'm an investor, a business owner, and a money educator. Understand it better, compound interest, cash flow, budgeting, investments, recover from debt. No one explained to me, put your money to work. It's about normalising the conversation. Hey everybody, it's Sarah. Welcome back to the Money Mechanics podcast. I'm very excited to be joined by Lee today. So Lee is a contact of mine that I met actually quite recently in the UK, and I met him at one of the networking events that we run in Northamptonshire. And it was about 2 weeks before he was getting on a plane to move to Thailand. So Lee, you're coming to us live from Koh Tao in Thailand, I believe, right?
Yeah, I am. Yeah.
So today we're going to be talking about all things crypto and money, which is very exciting. So Lee, just for anyone who's never met you or come across you before, tell us who you are, what you do.
So I'm Lee Markham, and nice to meet everyone. I decided about 5 years ago that I would take a look at this crypto malarkey because it seemed like everyone was changing their life, and I didn't really understand it at all. Walked away, then realized that I should probably understand why I'm walking away before I just give up on something, because there must be something to it. And it kind of went from there. Before that, I was in the RAF. I did 13 years in the RAF. Thought that would be my whole life because I had no real reason to leave until I started to look at the world in a different way, I guess, and then thought, no, I can't do this. I need to do my own thing. Felt my natural calling, which was teaching, because I love to teach. And here I am, yeah.
And so now, obviously, you are a crypto trader. You trade crypto, right? You invest and hold, but you also trade day to day.
Actually, no.
Okay.
I wouldn't call myself a trader. I do trade from time to time, but not in the traditional sense where I'm surrounded by screens and I'm watching red and green candles all day. I actually consider myself more of an investor in crypto for the long term. And when you look at the returns that crypto can generate, I won't go there now, but you don't really need to trade because they're good enough as they are.
Great. So let's talk about, first of all, what you were in the RAF and you just said then you want to do something for yourself. Let's talk a little bit about the mindset shift of coming away from being in a very stable, very structured, like employed environment, you know, that has its own risks associated to it, but actually is pretty reliable, to giving that up, becoming an investor, and then moving to the other side of the world. Let's talk about what you think's changed, like mindset wise, in that period of time.
It has been such a dramatic shift in such a small period of time, because I think when you're in the military, whether you believe it or not, you become institutionalized, and you have that group mentality of it's for the bigger cause. And I think you realize as you go up the ranks and as you're in there for longer, you discover that there's certain skills that you've got that you don't get to explore because you're not in the right role for it. So I had a lot of undoing. I was still in the RAF when I was going on this mindset journey, and it was a book called The Rich Dad, Poor Dad. Loads of people have probably read it, and then it moves on to the cash flow quadrant. Yeah, without a doubt. And I actually read it way before all of this happened, and I didn't really take it in properly. I read it again, and it was like reading a different book because I had a little bit more awareness about me. And then I read the cash flow quadrant, which is his sequel to that. And I thought, I don't think I can do this job anymore. What am I doing? I need to do something different. And I want to, because he talks about being an employee and then self-employed where you own a job and then a business owner and then an investor. And I thought I need to move across the other side of the quadrant. But what the heck do I do? What am I good at? I don't really know if I'm good at anything other than what I do in the RAF. So I had this mentor who said, success loves speed, and go and build authority. And as long as you give value, and there was another book, and it said money is the byproduct of the value that you create for other people.
That you offer, yeah.
And I was like, that is a belter of a quote. I wonder how I can steal that. And it's something I thought of, and I thought if I can give value to other people, then maybe they'll pay me for it. And I couldn't believe the first person that ever paid me to learn about crypto, because obviously there's a stigma associated to it. Whenever you say crypto, I had to get used to saying that I was in the RAF, where I was given a good response, someone would say, oh, my granddad was in the RAF, or my family were military, and they go, oh, that's great. And it was quite a nice reception. And then it shifted to, oh, I teach people about crypto, and they go, and you're on the back foot straight away. I have to now prove to this person that I'm not a scammer, because they assume they go hand in hand with each other.
Yeah.
And for the first, I would say probably 4 years of teaching it, it was really difficult. People didn't want to know about it, and now it's changed big time.
So let's just, for anybody who's listening to this who is brand new, like has heard the word crypto, Bitcoin floating around, but has literally got no fucking idea what that means, just explain to people in the simplest way that you can what actually is cryptocurrency.
Okay, I think that the term currency is probably the wrong term, because there's very few that are actually currencies at all. I would think of them really as a stock or a share within a company that gives you access to services. That's really what it is. But when it first came around, it was in 17 years ago, believe it or not, that Bitcoin came on the scene. And it was created by an anonymous person. We still don't know to this day who it is, which I think is a good thing, because if you don't know who the CEO is and it isn't owned by anyone in particular, then they're not corruptible. They're not, you can't sway their opinion and do. Yeah, exactly. So it was formed in 2009, and it was right after the 2008 financial crash. And I think probably the people watching this would have felt the pain in 2008, because it was a housing crash. And we trusted the banks. We had to, because that's where we park our money. And whoever this person or group of people that created Bitcoin, they created what was known as a peer-to-peer, cashless, digital payment system, where you can transact value across the internet with anyone in the world at the speed of data, and you don't need to rely on anyone in the middle. You don't need to trust a bank, you don't need to trust an intermediary whatsoever. All you need to know is it's based on mathematical code, and it's verifiable by anyone. And I know that sounds like a bit of a mouthful, but in simple terms, you're transferring value across the internet, and you don't need to trust anyone other than the fact that the code is completely visible. And if you want to go check it out, then you can. And that is essentially cryptocurrency. And they've evolved since then, because other companies and foundations have looked at Bitcoin and gone, oh, that's a great idea. I wonder if we can do anything that's better, because Bitcoin's now old. Maybe it's a little slow. We can go faster than that. We can make the transactions cheaper than that. And the term cryptocurrency is probably wrong, because many of them are not currencies. They're just, you own them, and it will give you access to goods and services, and that's really what it is.
Okay, a very short interruption of the episode, because I want you to get back to listening. I just wanted to remind you that the Money Mechanics weekly newsletter is completely free, and we'll send this out to you every week. All you've got to do is find the link in the show notes and get signed up. When we send this out to you, this weekly newsletter is going to include things that will help you to become a better money mechanic. It could be things like what's happening in the markets, things like budgets, how that's going to impact you. And I'm also going to share a lot of insight into what I'm doing in my own portfolio and in the portfolio of the guests we've got on the podcast, to really just help you understand what you could do differently to make your money work as best as it can for you. Make sure you go and find that link and get signed up. So explain to people. So again, I want to go back to like the real beginners, like who have never heard of it before. So there's crypto, digital assets, basically. When people talk to me about crypto, they always say, but Sarah, it's not tangible. Like it's not real. And I don't trust it because it's not tangible and it's not real. And I always say, well, I own shares in Coca-Cola, but they're not tangible. Like I can't touch them, feel them. Like I've not got a certificate now. Everything's in the digital world. How would you reassure somebody who's thinking, I want to understand this crypto thing, but it's intangible, so I can't get my head around it? Especially a lot of people listening to this will be property people who are so in the tangible space, bricks, mortar, like we've got houses you can't pick up and run away with. How do you reassure people that can't quite get their head around this digital asset piece?
I think when the reason comes out that because I can't see and touch it, therefore it doesn't have value, you can't see or touch Facebook. it's just software, it's code, that's it. But you still use it, it still has value. And it's what Bitcoin does is it gives people the ability to transact with absolute certainty that there's no manipulation, and there's no maybe manipulation in terms of price, but then again, everything is manipulated with price if you have everything. So one of the things I like to say to people is how does Bitcoin verify a transaction? So when you do it on your bank, and primarily we transact online now, we don't use cash as much. Arguably, we probably should, but we don't use cash as much. And we would send it because we trust the bank. And what they would do is, Lee's got £1,000 in his account and he's going to transfer £500 to Sarah. What happens? Well, they change the digits in Sarah's account to increase it by 500 and reduce mine by 500. There's no actual physical movement of anything. It's just a change of figures. And when it comes to that, we're just relying and trusting that the bank are going to do the right thing. We can't verify that it's right because we can't see behind the scenes. We just trust that that's the case. And when we look at the fiat currency, and there's a lot of people not in the crypto world not familiar with that term, fiat currency is everything that we use today, pounds, dollars, euros. They became a fiat currency in 1971. And that's because President Richard Nixon took America off of the gold standard. The dollar used to be backed by gold. It's no longer backed by anything other than trust. Yesterday, a dollar bought me $1 worth of stuff, and tomorrow should do the same because I trust the government. And there's no actual tangible assets backing it. Well, what they do, and they're doing it right now, and they've been doing it for a long time, is they inflate the currency supply by printing more. And when I say print, that's like inverted commas, just creating more. And they do this to stimulate the economy. But
which is basically just numbers on a screen, right? They just add numbers on a screen. That's really all it is, yeah.
That is it. And I have to ask people, what do you think happens to the value of the money in your bank account when they start printing more of it? And they go, oh, it probably goes down. Why? Well, it goes down because there's more of it. Okay, so you're saying it's a supply and demand thing. Well, yeah, I guess it is, because the more of something there is, the less valuable it becomes. Well, if you're saying that and the cost of everything is going up, your coffee, you go to Starbucks or Costa and a flat white's bloody £4, and you think this is ridiculous, this little bit of coffee. Yeah. Is it because the coffee beans are becoming so rare? No. Well, because it takes more of the pounds to buy the same stuff because they have lost their value. And we're measuring everything we own in a currency that's losing value. I refer to it as you're measuring your wealth with a ruler that gets smaller every year. So it's always going to look like it's gone up. Yeah. So, and when it comes to Bitcoin, you can't inflate it. You can't just go, you know what, we need a bit more Bitcoin because there's not that many there, and the demand's going up, so let's make more. Well, we can make more for a process called Bitcoin mining. And people think, I actually told my mum, you have to put your overalls on and get a pickaxe and go down the mine and find some Bitcoin, and bless her, she believed me. But she wouldn't know, would she? So it's mean of me to do that because she wasn't brought up in this era. Yeah. She's of a generation where we didn't have anything like that. So I only make fun because it's my mum, and I get to.
And you're allowed.
You do. Yeah, exactly. So, and I have to say, well, by bringing these new Bitcoin into circulation, no one's just going, that's me typing, by the way, that's my impression of typing numbers onto a screen, making more. It takes real energy. Bitcoin mining it's where lots of computers all around the world, it's a big decentralized network, and people are running this software on their computers, and they're all competing against one another. And I won't go any more technical than that, but they're all trying to win the new piece of Bitcoin. That's how it comes into circulation. That's backed by energy. So when someone would say, well, it's not backed by anything, it's not tangible, every piece of Bitcoin that's in existence costs real energy. Energy costs money. Therefore, you could argue that it's tangible in that sense. So that's why. Yeah.
So I think let's come back to the supply and demand thing, because I had a conversation recently with somebody, and it was actually a friend of mine, and we were talking about crypto, and I was saying to her how much money I've got in crypto, what I hold, etc. And she said, but Sarah, I don't really understand how Bitcoin's going to be any different to fiat currency, because surely you can just create more. And I was trying to explain to her that actually with Bitcoin, there is a finite amount of it. I think it's 21 million Bitcoin, right? Is that right?
Yeah.
And
Yeah.
We've mined so far globally, we've mined about 20 million. So there's about 1 million left to mine, is my understanding of it. So do you want to just elaborate a little bit on that so people can understand the finiteness of it and what will eventually create that, in my opinion, again, this is not investment advice, in my opinion, why the value of Bitcoin will continue to go up, because actually we're going to reach a point where it's all been mined and it's all owned, which means if people don't want to sell it, the price will go up. That's my understanding. So talk to us a bit about that.
I would say what you said is absolutely spot on. And if I'm going to add any meat to the bone, it would just be that we're nearly there in terms of how many Bitcoin are in circulation. But the person who created this is so smart that they built in this scarcity mechanism. So what happens is every 4 years, the amount of Bitcoin. So imagine, I like to use real examples that people can relate to. So imagine gold mining. Now, we know for a fact that there is a limited amount of gold on Earth. We don't know how much there is. We just know that one day we'll stop finding it, and then that will be everything that's in circulation as far as we know. But we know there's a limit. We just don't know what the limit is. And we mine from physical gold out of the earth a certain amount roughly every year. There'll be a certain amount of tonnage of gold that we bring in, and we call that a stock to flow ratio. The stock is how much there is, and the flow is how much new gold makes its way into circulation. And the same with Bitcoin, but the difference is we not only know there's a fixed supply of Bitcoin, we actually know what the supply is, and we know when we're going to reach it. In the year 2140, unfortunately, I don't think any of us will be around. I hope we are, but I don't think we will, in 2140. And we know that's going to happen because all of these computers that are verifying transactions to make sure that people are not spending money that they haven't got, because it's all very technical behind the scenes. But the point is it's mathematical certainty that you can't really cheat the system. I wish it was like that in the traditional banking world, but it isn't. And the fact that there's only going to be 21 million, and we know when that's going to be, when you look at how many Bitcoin are already held by people for a long term, we've got the person who created Bitcoin that hasn't moved any of their Bitcoin since day one. They've never moved, and that's 1 million of the supply. Then you've got asset managers like BlackRock, Strategy, which is owned by Michael Saylor. Even the US government and other governments around the world are buying and holding Bitcoin as a store of value because they recognize it's scarce. You've also got, and I think this is a really interesting one, there's lots of people around the world that have Bitcoin on their phone in a wallet, and they haven't touched it for years because they've forgotten how to access it. And if you don't know the password or the seed words, which they're known as, and you can't get back into it. And there was a great story, I say great story, a horrific story of a guy in Wales who accidentally threw away his hard drive that had his private key on there. And it would be worth, I think it's going to be worth close to $1 billion, very close to $1 billion now worth. And he was trying to excavate the tip to bring, and said, I'll split the money with you. And they said no, and he's kind of had to write it off. Now that Bitcoin will never be replaced. No one, who's going to do it? No one's going to say, oh, I can make more Bitcoin. Well, no, you can't. And it wouldn't be a good idea anyway. So let's just say that's now been removed from supply. That's one person. How many other people in the last 17 years have done something that's similar? So we actually don't know how many Bitcoin are actively able to circulate. So we can assume that the supply of Bitcoin is probably less than the 20 million that we mentioned that are available. How many people are on the planet? 8 billion. How many people, percentage-wise, roughly own Bitcoin? Less than 8% of the world. So even if every millionaire decided, oh, actually, I think I should probably own 1 Bitcoin, they couldn't even own 1 because there's not enough for everyone. And when the rest of the world wakes up, and unfortunately, I firmly believe that the likes of BlackRock and friends they've known for a long time that what Bitcoin is and where it's going to go, but they've been able to manipulate your opinion so that they can acquire it nice and cheaply. And when they're ready to go and they've held enough, they'll go, Bitcoin's really good, by the way. And then you go, oh, really? Oh, I better buy some then. And you've given me the endorsement. So, yeah.
I think with crypto, Bitcoin, Ethereum, Solana, like any of the coins, I think in my experience, people's biggest barrier to it in fact, I think there's two biggest barriers. One is fear of not understanding it, like fear of just, I don't really know how it works. I don't really know how to buy it. I don't really know how to do it. That's one thing. But the other thing is this underlying fear that it is a scam. Everybody that they know has lost money in crypto because they've put it into a scheme or a pyramid fund or someone stole, like, etc. So let's talk a bit very honestly about the risks associated with crypto. I think the first one obviously is volatility, and anyone listening to this podcast will know that I always say don't invest what would destroy you to lose, because we need to be ready for the fact and expect that volatility will happen. Regardless of where we are in the market, whether we're at the top, the bottom, whatever's happening, there will always be something that will create volatility. So volatility aside, what other risks are associated with crypto and how can people prepare for them?
Mm-hmm. Okay. I just want to touch on the volatility as well, that the volatility, in my mind, is what gives it the bigger advantage over other assets. Because they said, it's a great quote. Again, I wish it was mine, but it's not. Volatility is the price of being early. And when you are early to an investment and other people haven't got involved and pushed, the market cap of Bitcoin is only 2 trillion. It's not that much. The whole market cap of crypto is only 4 trillion. So again, not that much. It's probably, I mean, when you look at gold, it's 30 trillion. And then you look at the commodities and Forex markets, so much bigger. But
anyone listening to this that has never heard the phrase market cap before, so just again, I try and remember we've got real beginners on here. So market cap is just the total global value of a particular asset. So the market cap just means if one person owned everything, that would be the value of what they own. Basically, that is the market cap.
That's a great way of saying it. I've not heard it explained that way. That's good.
I remember when I was first started, and I used to, people say, "Oh, the market cap of," and I'd be like, "What is that? What does that mean?" So I try really hard, if we're hearing jargon, to go, "Oh, I wouldn't have known that at the start," so I'll explain it. So that's why we put that in.
Yeah, perfect. Yeah, no, it's great. I like to. I've created all kinds of courses. I work with people at all levels with it, and sometimes I have to remember what they don't know. And they'll remind you. And I always think of my mum. I go, right, would my mum understand this? Go back a step.
My mum, bless her, would not understand this. She'd love to, and I think she could, but I'm not sure she would.
The thing is,
she'll probably listen to this podcast and phone me and tell me off. Yeah, exactly.
Hello, Sarah's mum. So, yeah, it is volatile, but I think that creates a lot of opportunity. If you look at, let's say, housing, and now we know housing doesn't go up in a straight line. You do have like ups and downs, of course you do, in any market, otherwise it would be completely manipulated and not real. But they're much less volatile and aggressive than they are in crypto. You could look at a portfolio and the next day it's dropped 20%. But it's an unrealized loss until you actually sell it. And what you'll find is you end up becoming numb to this, and you just go, if I just zoom out on the chart, and what I mean the chart, the price action, and look at a bigger picture, rather than focusing on what's happening right here over the last week. Let's have a look over the last year. Okay, the general direction is up, and we've had a few volatile moments along the way. For me, that's buying territory. That's me getting a bargain. And people in property, they're looking for, they made most of their money during financial crisis. It's not nice, but it's a great time to do it. And we get that gift with crypto all the time, if you can reframe it that way. So that's volatility. But you mentioned about some of the scams or things to protect yourself from. One of the reasons a lot of people in my network who know me have come to me because they've been burned. And the primary one is projects, MLM. MLM as a business model, I don't think it's overly bad. All you're doing is incentivizing the users to share value with other people rather than the company going, I'm just going to spend it on a marketing team and a big billboard. If you like something, if I go to a restaurant, I won't stop talking about it. I'll tell everyone. And I'm not getting anything for it. But if they said to me, Lee, if you refer people to our restaurant, we'll give you a free meal, then everyone's going to know about it because I'll have my megaphone out in the town centre because I'll share it. But there's no problem with that. People don't mind that and go, yeah, he's getting a little bit of a commission, but he's just sharing value. That's fine. But when I always think the person joining the opportunity should always get more value than the person sharing it. And when it's combined with crypto, run away, because it will never work. It's never worked. And it's created this horrible image in people's minds that that's what crypto actually is. And the people who were burned by this kind of thing were this is the sad part. They rely, because crypto is a new technology and it's a new industry and it's a lot of jargon, they rely on the fact that you don't know the terminology. You don't know what it means. You throw out words like NFT and Web3 and AI blockchain and they go, oh, I don't know what that means, but it sounds fancy. And you're saying that if I put this much money in, I'm going to get a daily cash flow. Because everyone in the UK and probably other countries, I say everyone, a lot of people, they're bloody struggling. And it's not been made any easier by the government, obviously. And they're looking for another way of making additional income. You can't blame people for that. They want it. And when it sounds like they don't have to do anything other than invest and they get a monthly or daily return, they're going to be very tempted by it. And that's where they sting you. So you have to, education is the best antidote to this.
I totally agree. And I think, like, again, I've met people, I do a lot of speaking on the circuit in the property space, the investment space. Obviously, we run our events. And a very common conversation I have is I put money into one of the schemes. I won't name any of the schemes. It's not fair to do that. But again, do your due diligence on stuff, everybody that's listening. The thing about the MLM style schemes where crypto is concerned anyway, is it's not necessarily a scam in the fact that the crypto is a scam. That's not actually, it's not the crypto that's the problem. The problem is that in order to be able to be paid out from the top, they have to continue to recruit at the bottom. So it's effectively a pyramid scheme, right? So the money is coming from the top of the tree. So everything we do at Money Mechanics, what we really try to champion is that we want to make people aware, educated and confident enough to be able to be the champion of their own money. So in this scenario where you don't understand it, you're nervous of it, but you want that return, you want to be able to see the benefit of it because you need a bit more cash flow, you're struggling financially, etc., you've got debt to clear, whatever it is. The thing is, I think people don't realize is that you actually can get the returns yourself. You can invest the money yourself. You don't need to be super clever, rocket scientist, have a finance degree to take the money that you would have put into an MLM scheme for somebody else to invest it for you. You actually can do it quite simply by just learning how to buy it. And again, like I buy my crypto on my phone and I wouldn't say I'm in any way a crypto specialist. I'm absolutely not. For me, it's about hedging against risk. So I believe if fiat currency failed, I own some Bitcoin. So for me, I've hedged against that risk in the future. That's my own opinion. I think a lot of people think that it's not accessible to them because they're not an investor yet or they don't have a lot of money yet. So let's talk a little bit about if somebody wanted to start buying their first bit of crypto, how much money would someone actually need to start just buying some?
The joy of it is it's an asset that you can start with a couple of pound. Like it's a really low barrier to entry. Now, what you're going to get in return for that's probably not going to change your life, but you would know that anyway because you're only putting a couple of pound in. But to access this, again, I keep talking about my mum here, but she...
Both our mums are getting shout-outs today.
They deserve it. So she said to me, Lee, because she brought me up as a single parent, and I remember her working 3 jobs. My nan would come and look after me while my mum went out to work at night. I remember it really well. And she said to me recently, maybe 6 or 7 years ago, Lee, I have got no pension whatsoever because the jobs I worked in, some of them are cash in hand. My state pension is like £16 a week. It's laughable. What am I going to do? And I thought, I don't know. And then 5 years ago, she said to me, I've got some money. This was inheritance from my nan. And it was about £4,000. It wasn't a lot. But she said, well, it's a lot to me, but what am I going to do with it? She left it in a building society. And I said, how much is that earning you in interest? And she said, about 2%. I said, what's inflation? I don't know. I said, it's fine. It's fine. Let's go on Bank of England website. Let's see. That's what they tell you inflation is, not real. That doesn't factor in things like shrinkflation or anything. Like, it's just a complete scam, really. But anyway, let's take the value. And I think at that time, because it was just post-COVID, so it's a bit higher. I think now it's sat around 3.5%, but it was higher then.
It's about 3.5%, yeah.
So I said, let's deduct inflation from your interest earnings. We're in a negative now, so that's how much purchasing power that money is losing every single year. You can't you have to grow. You have to outpace inflation at least, otherwise you're not going to have a better standard of living. And I said, for me, if it was me, I would put a large chunk of it, and let's be honest, there's not a whole lot, into Bitcoin. That's what I would do. It's risky in the sense that the asset is much newer, but if you put it into a building society, it's going to do nothing. You're not going to start learning about property because it's a lot more intricate there. It takes a long time and you need much more capital to start, typically. You can buy gold, but gold is a store of value. Again, it's gone crazy this year, but typically it's flatlines. It stays with inflation. I would go a bit more aggressive and I would buy Bitcoin. And then every month I would set up a regular payment amount. You can do this on Revolut. But I mean, that's a great easy way, and we can get a little bit more technical and go, now you're a little more knowledgeable, let's be more crypto focused and get away from the banks and do it slightly different, because that was why crypto was designed anyway. So she put $4,000 into crypto, into Bitcoin. The price was about $30,000 at the time. And obviously today it's about $102,000. So that's already done amazingly well in just a few years. And she does £150 a month on a standing order to buy Bitcoin. And she says, that's nothing though, Lee. Everyone else is probably putting loads more in. I said, don't worry about them. Let's just do you. Doesn't matter what they're doing.
Will do.
As long as you're consistent, that's going to, well, I mean, I look at it now and I can't help but kind of smile, because I think she's earned that, and it's given her the opportunity. It could have gone horribly wrong, and then people might listen to it and go, well, it could have gone the opposite way. But that was the risk that she was willing to take. It was either I've got $4,000 that's going to erode over time and do nothing, or I take a chance on something that is being more and more adopted.
$4,000 in reality doesn't do much anymore, right? $4,000 when actually what we're talking about is pension, like what we're going to live on when we are not working. $4,000 is not enough. So when you then put inflation into the mix, actually we're guaranteed to lose money. So actually, what's the bigger risk? Putting it into something that could go up in value versus leaving it somewhere where it's guaranteed to go down in value. This is something we talk about a lot in Money Mechanics, is how have the banks convinced us as society that a guaranteed loss of our money is better than a potential uplift on our money? I don't know how they've done it. The best marketing team in the whole world. I don't know. But that's what we believe. We believe societally that leaving money in a building society, in the bank, safe as houses, right? Like that, because the banks are never going to go bust. It's protected, et cetera, which it is to a certain degree, but it's actually not all that protected, really, when you dig into what the protections actually are. Guaranteed loss of value versus potential gain in value, potential loss in value, potential stay the same. Why is it that we believe that this is better than this? Do you think that's a mindset thing? Do you think it's an education thing? Do you think it's a just a financial literacy? Like, what is creating that misunderstanding, do you think?
I think it's a combination of everything. I think the rules of money have changed now, and we typically learn from our parents. And there's a great book called Killing Sacred Cows. You may have read it. It's a great money book.
No, I haven't. And I'll write it down though.
Your sacred, it's a great book. Definitely the audio book. So he says in there that your sacred cow is your pre-existing belief around money. And it's typically what your parents taught you. So if your parents were scarce, and they lived in a scarce mentality where they didn't invest, and they earn money and they put it in like the teapot in the cupboard or in a coffee pot or under the mattress, that kind of scarce mentality, then you'll probably have that as well. I bet you've heard this phrase from maybe your parents, or if I won the lottery, I'd put it in the bank and live off the interest. Everyone said that. If I had £1 million, I'd put it in the bank and live off the interest. Well, good luck doing that today, because it doesn't work.
The bank's not the place to put it. Yeah.
No. But we still apply what we used to know. So I think it's financial literacy big time, because I don't know what schools are teaching kids nowadays about how to perform or how to get a job that probably won't even exist in 5 years' time.
Exactly,
and
100%.
So maybe a combination of financial literacy, because they wasn't taught it, a scarce mentality that they inherited from their parents, and just not being aware of how to actually manage this stuff.
This is so interesting, and I think so let's come back a little bit to the scenario that I think a lot of our listeners are in. Okay, so that is going to be maybe not investors yet, maybe carrying debt, maybe employed or self-employed, trying to keep their head above water, like just about maybe managing it, but struggling a little bit. If somebody is thinking, do you know what, I've been super curious about crypto and this is how I want to get started. Obviously, education's an important thing. And I think, I'll put in the show notes, like how people can contact you if they want to talk to you a bit more about that. But if it was you starting again right now in 2025, 2026, let's say you've got £150 a month. Let's use that same figure that your mum's using. How would you advise people to get started with crypto into their portfolio? Like, what would you suggest?
I would come up with a plan before I put any money into it. And I would have a look at my own finances and go, realistically, how much can I afford to put into crypto that isn't going to affect my life? So come up with a budget and a plan, because most people don't have a clue what's coming in and out of their accounts every month.
Yeah,
I mean,
true.
I even had a look at my subscriptions the other day and thought, bloody hell, why have I even got that going on?
It's so easy.
It's so easy because everything's monthly now. So I would look at that and I go, what can I afford to invest? Because you said this earlier, it should never impact your life if you invest. Really, it should just be able to come out of your life. Because if it does, then you've probably over leveraged at that point. So I would do that, have a clear amount of how much can I afford to invest. I would look at my risk tolerance. You'll know if you're a risky person based on how it feels. You get that gut feeling. You go, I'm about to invest that, but I go, I don't know, I feel a bit, that's too much then, because your intuition knows. So probably slash it in half and see how that feels. So have a number in your mind of what it should be. Your risk tolerance of, okay, because I would consider Bitcoin to be a less risky than other crypto assets. You mentioned Ethereum and Solana and XRP. Value of those in terms of market cap, which we said, is lower. So the opportunity for them to grow is slightly easier because they're less valuable already. It's like buying Amazon before it was huge. It was easier to make money in Amazon early than it is now. So yeah, understanding you as an investor is absolutely crucial. And yeah, education aside, the next thing is really to do it, because I think we think too much about the risks of, oh, but what if this happens? What if you don't do it? Then what? You can analyze this forever, but if you don't take any action, then you're guaranteed to get nothing. So sorry if I didn't answer the question properly there.
No, it does answer the question. I think doing it is a really important thing. Like, take the action, like do the step. So, and it's quite a funny story. So in like 2015-ish, I think Bitcoin then was about $250, if I remember correctly. I said to my mentor at the time, I've got £1,000. I'm going to put it into Bitcoin. I'm going to buy 4 Bitcoin. That was what I said to him. And he said, so he was a property guy, and he said, you don't want to do that. It's so risky. Like £1,000. Like, can you afford to lose £1,000? I was like, well, no, not really, because I just started my business. I still had debt then. Like, I was still figuring it out. And I didn't buy it. And I'd have that £4,000 would be nearly £500,000 now. And I'm raging about it because I didn't do it. I took advice from someone that didn't hold Bitcoin, didn't hold any crypto, who'd never done it, who didn't understand it, who was a property person. And because I trusted that opinion, because he was my mentor, I thought, well, actually, I'll just trust the opinion. I'm paying for his time and his advice, so I'll just trust the advice. But had I gone slightly outside of his advice and talked to people that were doing it and understood why they were doing it, I would have done it. And that £1,000 would be nearly £500,000 now, and life would be very different for me because I would have, I'd be in a very different position. I want to talk a little bit, because I know you know a lot more about this than I do. You buy and you hold. I buy and hold as well. And I get the question a lot from, yeah, but Sarah, that's fine, because if I buy and hold and the value goes up, I can't get to any of it because I have to sell it to be able to do it. Can you explain a little bit about borrowing against the value of Bitcoin in the same way that we borrow against the value of houses? I don't think a lot of people realise that once you have a portfolio of digital assets, stocks, shares, etc., you can borrow against the value of it to be able to fund other things. So tell us a bit about that, Lee.
This has been something that's been available for quite a long time in crypto, but it's become more mainstream now because the US are allowing you to do this, use it as collateral on a mortgage application. So this was becoming into US law. And you've also got Jamie Dimon, the CEO of JP Morgan, who was a big critic of Bitcoin. I don't believe he ever was. I think he's saying that because it was in his best interest to criticize it, but that's a different story. Yeah. Who has now said that you can hold Bitcoin as collateral on a balance sheet, again, to proof of funds. This is a huge change of tune. But borrowing against your crypto is no different, essentially, to what you would do in property. Now, don't take my advice in property, because I am not a property guy. I've got a basic understanding, and even that would be questionable. So I'm not your guy to listen to with it. But I do like working with property people in crypto because they get it. They don't realize that they understand as much as they do with crypto. It's a natural transition because the terminology is similar. Loan to value, collateral, yield, equity. They get all that, and it's the same. So let's say I'm simple, so I like using round numbers. Let's say you've got one Bitcoin and it's $100,000. We can imagine that. And you might wonder, if people are watching, go, why does he keep saying dollars when we're in England and mixing it up? It's the global reserve currency. It's why we price oil in dollars and why we price. So that's why. One Bitcoin, $100,000, and you go, I don't want to sell that, but I need access to liquidity now because shit hits the fan. My car's gone kaput. Or I don't know, maybe you see an opportunity in the property world and you think, okay, that's too good to miss. It's only $20,000 pound down. I've got a Bitcoin, but if I sell it, you've got capital gains potentially if it's gone up. And we know that's already been slashed multiple times. What's it going to happen in the budget? Who knows?
Who knows?
So people don't want to sell it. That's another podcast in itself, isn't it? So what do? Well, this is where you can hold on to the asset that we believe will appreciate over time, with a lot of volatility along the way, but it will appreciate because time has shown us that that's what the trajectory of Bitcoin has been. The price goes up. Now, it doesn't apply to only Bitcoin. That's just an easy example. And you can do this with other coins as well. So let's say you hold some Bitcoin and you got 100 grand and you want 20,000 of pounds or dollars, whatever we're using here, to release that, but you don't want to sell the asset that's going to go up in value, and because you don't want to pay tax on it. Well, there's various different platforms out there, and I would say to anyone who's tempted to do this after I say it, because you probably will be, because it's an amazing strategy. Lots can go wrong if you try this without knowing what you're doing. But when you get it right, it is how I built my portfolio to what it is now. And I started with next to nothing, and I cannot believe it. And that was because I used this strategy of, I've got one Bitcoin. You don't need that much. You can do it with less. But we've got one Bitcoin. It's worth 100 grand. I want 20 grand. Well, Bitcoin on the platform I'm referring to right now allows you to take a loan to value of 50%. Quick maths, 50% of 100 grand is 50 grand. Okay, I can borrow 50 grand. Would you max out your loan to value? Well, in crypto, definitely not, because if the price of Bitcoin drops, then you're over leveraged. You're above 50% loan to value. Now, what do? They'll send you a polite reminder and go, hey, Lee, just letting you know that you either need to add more collateral to bring yourself back into balance, or we're about to sell some of your Bitcoin to cover the loss. Well, you were going to sell it anyway, I guess, so it's not really like anything's changed. And you definitely don't do a full loan to value. You give yourself some buffer, and you say, right, I'm going to take out 20 grand. And this platform will say, do you want it in pounds in your bank account, or do you want to take it out as more crypto? You go, I'll have it in pounds so I can go and do something. Goes in your bank. Do you pay tax on it? well, I'm not a tax advisor or an accountant, but because it's debt in the UK, it's considered debt. We don't pay tax on debt. So it's a tax efficient strategy. What happens? Well, I've got a great story on this. It's a quick one, don't worry. So I've got a client of mine. He's been with me for about 4 years. He owns a few dental practices, and he wanted to buy. He was working with me. He's one of my first clients, and he said, Lee, I've done what you mentioned. This was in 2023. Lee, I bought those Bitcoin that you said, because in January 2023, the price of Bitcoin dropped from 59,000 or something down to 15 grand very quickly. And I said, if it were me, I would be buying
again. I pray for that to happen again.
Yeah, me too. And it gives us another chance. And so I love the volatility. And I said, buy some Bitcoin if you can. Anyway, he come back. He said, Lee, I've got free Bitcoin. I was like, free? Good work, man. That's great. And he said, yeah. Came back to me again. In March, and they were 23,000 each. He said, Lee, they've gone up, and I'm going to get a new car. There's an Audi A5 I really want to get, and I found one that I like, and it's 30 grand. I've got enough. If I sell my Bitcoin, I can get it and have a little bit left over. And I was like, don't you dare. Don't do it. Dare. He said, what? Why? I said, just give me a call. So he called me up, and I said, right, whatever you do, don't sell them yet. I need to teach you a strategy, and you hop on a call. I'll teach you. It'll take me about an hour. But I would want you to implement this properly. So let's just do it. He said, okay, I trust you. What you want to do is you want to borrow against that crypto. Then release the money that you can. Don't buy the car outright with 30 grand, because if you do, you're going to have to really over leverage. Just maybe put a deposit down on it for now and just wait. So, all right, okay, then what? So, well, your free Bitcoin now are worth like 40,000. No, more than, sorry, like 65,000 or so, nearly pushing $70,000. So you've done pretty well. If you did a loan to value of 50%, you could buy the car outright, but you'd be a little bit overstretched. So I wouldn't buy the whole thing, but it's up to you, but I wouldn't do it. He said, I can put more money in the account as more collateral. So, all right, we'll do that then, if you're happy with that, and then take out 30 grand as a loan, go and buy your car, and then wait. So, okay, I'll do that. So he did. So he showed me this new Audi. Look, I've got it, Lee. I bought it and with my loan. Now what? I said, just wait. He said, I can't believe how easy it was to get that loan, because they didn't even ask for a credit check. And am I supposed to make monthly repayments? I said, no monthly repayment. He's like, why though? But they're charging you an interest rate of 17% a year it was. But your assets are going to go up more than 17% a year, so it's negligible. So all that needs to happen is your Bitcoin needs to appreciate, which we know it does over time, to such an extent that you can sell a portion, 30 grand of it, pay off your loan, and whatever you have left is yours. Well, it come to around December, and his Bitcoin portfolio was worth about $160,000 at this point with his free Bitcoin. He said, Lee, should I sell a portion of it? I said, I can't advise you. I'm not a financial advisor, but it's probably a good idea to remove the risk at this point, so you can sell some. So he sold 30 grand to, move my camera there, my wife's messing about in the house. So he sold 30,000 worth of Bitcoin. Yes, there was capital gains tax to pay on that because it had gone up quite a lot, but he paid off the loan. His car was free, and his portfolio sat at $130,000.
I love this. This is so cool. So if someone wanted to apply for a loan like that, like what are the platforms that are out there that they can do it on?
So there's a few. It depends how technical you are. That one is called Nexo. There was one previously called Celsius, but it collapsed. I know that's not a round of confidence for people, but that's one of the educational pieces of knowing how to research platforms. Yeah. Is the platform over collateralized? Do they have proof of reserves? If your answer is, well, I don't know, I wouldn't even know how to check that. That's why we have businesses like yourself and me, so we can help people with that. Yeah. But there's decentralized platforms as well, which are a little bit more technical. There's no customer service or anything. You're dealing with nothing but code. That's it. As long as you have the amount in your account, and you say, look, I've got this amount of Bitcoin, I'm going to park it here, and they will pay you interest on it, way more than a bank. And then so you're going to earning from that. And then you can say, well, I'll take out a loan, and then they'll charge you interest on it. But because you're earning interest on the collateral, and it offsets the interest.
It's probably
on
earning more money than the interest on the loan. It makes total sense to me.
You're being paid.
I mean, this is fascinating to me. Fascinating. And again, like everybody in the UK who's in the property world will know that at the moment, property investors are having a big conundrum of, do we sell up because of all the legislation that's just come in, like renters' rights has just come in. There's all this stuff. Obviously, there's a lot of tax happening with Labour government. There's lots of changes happening. And the thing about property is your ability to refinance against the value of the asset that you own and pull money out and reuse it and pull money out and reuse it. Now we've got the ability to do this against these sorts of assets that the capital growth beats property in pretty much every city in the UK. If you look at the data, and I know property people say, yeah, but capital growth over time, blah, blah, blah. And I get it. Property will always be in my portfolio. I'm pretty certain. I'm a property girl. Like, I love property, but I always try to encourage people to look at the data. The numbers tells us, the capital growth of this asset versus the capital growth of that asset, this asset is outstripping this asset at the moment. And if we can now also refinance and reutilize our money, that is in fact the reason why we all do property, is because we can cleverly use the asset as collateral to fund other things. Now we've got access to do it here. That is very interesting and very exciting, which I'm sure a lot of people will be really curious to learn more about. So Lee, I want to come back a little bit to the mindset of somebody who invests in crypto. What do you think people need to have nailed in their minds, in their heads, to be able to be successful in this space?
You need to understand why the current financial system is so flawed. Because if you don't know what the problem is, you can't find the solution. So you have to understand that. And you probably, I know I'm generalizing that most of your audience are property people, but they're already long-term mindset. That's not even a word, is it? But they have a long-term mindset. Yeah. And you certainly need that. You need to be able to handle volatility. And that's that's a combination of emotional maturity, having a little bit of risk in you, understanding, and actually being prepared, because it was really difficult for me and a lot of military people, because we're very cynical. That's just how we're bred in the forces, to be very cynical about everything. You need to be open-minded and open to, someone might just know a little bit more than you. And I'm always open to it. There's people that know more than me in crypto. And I love learning about that from them, because they've got experiences that I don't have, and I might have experiences that they don't have. But so your mindset needs to be very geared towards openness, willing to learn, and also willing to accept that what you previously thought about crypto might be wrong. And that's really hard, accepting. It's that cognitive dissonance of, I don't want to. A comfort in lie is easier than a hard truth. And I think we've all had the wool pulled over our eyes with crypto by the big players. We have. Because it's changing now, because those same people, the banks and the governments that told you to avoid crypto, are the same ones selling it to you.
Yeah.
The irony.
I feel like we could go on a very interesting debate around political, governmental, institutional use of finances and influence of our finances. But that's probably for another episode, I think. So I could talk to you about this for all day long, and maybe we'll do another episode on this in maybe 6 to 12 months, because what's interesting is that this market is changing so often. I think actually keeping people up to date is really important. But we have to wrap up at some point. So at the end of every episode, we always ask our guests to answer a question that was left for you by our previous guest, and then we'll ask you to leave a question for our next guest. So the question that we were asked by our previous guest was, if you were going through a period of crisis in your life right now, what are the 3 things that you would do with your finances to get yourself out of it?
Wow. Okay. I feel like I'm going to do an Elon Musk style long pause to think about it, but
that's all right. You got time.
No, it's a great question. If I was going through a period of crisis, what 3 things would I do to...
with your money, what would you do to help you get out of it?
Okay. So I'd have to liquidate something because a lot of the assets are, so I'd want access to liquidity that I could grow something quickly. I would probably borrow against my portfolio because especially now we're at a point in crypto where it's so impossible to ignore it. I think we're at the cusp of something massive happening, especially with the dollar doing what it's debasing so quickly in the pound and people flock into assets. So I wouldn't want to get rid of it, but I would need access to liquidity pretty quickly. I would, if I was in a real crisis, I would actually channel my inner aggressive risk taker inside me, because I started my crypto business with no money, and I reckon I can do it again. So I would probably go aggressive into highly undervalued coins that have a demand placed on them. And the ones that I would be looking at that are majorly underpriced are coins like Solana at the moment, Sui, and a strong AI coin such as BitTensor that are undervalued. And the reason I would go with them, and I wouldn't throw lots of money at this because I think I'm in a crisis, I need to do something with it. But I need to potentially, I would be looking right now because the market's down. We've had a bit of a period where the market's gone down. You will know the phrase, when the market's fearful, be greedy. That's a Warren Buffett, isn't it? And no one wants to buy when the market's fearful. Everyone's scared to do it. And they go, oh, what if it keeps going down? I would go, that's my opportunity. So I'm going to go in and buy some undervalued things. So that would be my first bit. Take a loan, buy some undervalued crypto assets, and I would probably release some more. And am I allowed to invest in my own business?
Yeah, you can invest in what you want. Sure.
Sorry,
what you want to do.
I'm asking you the rules here, but you didn't even ask the question, and now you're the adjudicator.
There are no rules. Yeah, there's no rules.
You know the rules, Sarah. I've got no idea. I think there's no greater investment than in yourself and your own business. And for me, things like Facebook ads or Instagram ads are really powerful. The return on investment on them are massive. Now, I know I give a good service to people, and I know what I do creates value. It just needs to get under the right people's noses, and then they do it. And if I could invest some of my capital and go, let's get this under every person's nose to the point where I can't even facilitate this much education for people because I'm only one man, I'm going to do that and invest it in my business. That's probably what I would do.
So you'd leverage against what you've got. So you'd put what you've got to work as quickly as you could in as intelligent way as you could. You would double down and invest more. And you would also develop self and business. They're like the three core things that you would do. Amazing. Thank you very much for that. And then we ask you a question for our next guest. So you can literally ask them anything you like, ideally linked tediously somewhere to money, finances, investment. Okay. What would you like us to ask our next guest?
Okay. If you have kids if you have kids already or you were to have kids, would you trust the traditional education system in school as it is today? And if you do, what would you add and what would you teach them at home that would make the biggest difference to their future? So would you teach them things? I'm not going to say some examples, but what would you be teaching your kids now to excel in a world that's nothing like it used to be?
Great question. We'll ask that. Thank you very much, Lee. Appreciate it. So Thank you so much. It looks like the sun's setting where you are, which is lovely.
Yeah, it's gone a bit dark now. Yeah.
It's fine. Lee's in Koh Tao in Thailand and been snorkeling today, living the dream life, which is amazing. Lee, thank you so much for your time. If people want to get hold of you, talk to you about your education, just pick your brains on stuff or follow you on socials, where are you? How can people get hold of you?
You can follow me on social media. Instagram is crypto_Lee Markham. You can go to my website, which is bluegrasstraining.com. My wife's from Kentucky, so that's the bluegrass state, and she's been my biggest cheerleader alongside my mum. So I gave her the name bluegrass comes from
Amazing.
there. So, and you'll find, because I work directly with property investors, helping them diversify into crypto and pretty much doing everything with them. And that's the hardest bit is, all right, there's definitely not a shortage of information. You can go on YouTube, you can find it everything that we do, both me and you, there's information out there.
Available.
But it's not been put together in a way. So I've put it all together, and that's what I do. So yeah, if people want to work with me, then fantastic. So bluegrasstraining.com.
What I'll also do is make sure the links and everything are all in the show notes. So we'll make sure that the correct links and everything for people to access. Thank you so much for your time. It's been great chatting to you, and
you too.
We will wrap it up. See ya.
Sounds good. Thanks for having me.
No worries. Thank you so much for getting to the end of the podcast episode. I really hope that you enjoyed it. I just wanted to take this opportunity to remind you that the weekly Money Mechanics newsletter is available to you completely free. This is a newsletter I'm going to send out every week to just give you some ideas around what's happening in the markets, what's happening at a global level, what's happening at a lot more local level, so that you can better understand what you can do with your money to make it work for you for the future. I'm also going to share in the newsletter what I'm doing in my own portfolio, just to give you some insights into what my ideas are, why I'm making the decisions that I'm making, in the hope that it will help you to make those decisions in your own portfolios as well. All you've got to do is find the link that's with this episode, hit the link and subscribe, and that newsletter will start to come out to you every single week. I'd also really love to take this opportunity to invite you to drop me a review. I love the opportunity of getting to share these podcast episodes with you. It really helps me to better understand how we can do the best job that we can here at Money Mechanics if you tell us your feedback. So drop us a review, tell us the sort of guests that you want, talk to me and connect with me on Instagram, talk to us on YouTube, wherever you are hanging out. Tell us how you're finding it, and we can make this the very best podcast it can be. Thank you again for being such a valued listener. I appreciate you all, and I'll speak to you soon.